Good afternoon, Mr. Hewson. In the last few weeks, we have seen a sharp drop in the markets, and we have a lot of issues around the world, geopolitical and economic, like the ISIS state, the Ukraine problem, the Ebola virus, the economic in Germany, which is not going so well. The first question is, which is of these issues the one which is weighing the most on the markets?
Yeah, I mean, I think these are all valid points, Alessandro, and collectively they've had a part to play. But I think it's this week's terrible economic data out of Germany that's really been the catalyst for pushing the market lower, as well as obviously the continued disagreements between Mario Draghi, the president of the European Central Bank, and Wolfgang Schäuble and the German government about what steps to take next. Now, the ECB wants Germany to use its what he calls the extra fiscal headroom that they have to try and stimulate domestic demand, and unfortunately Germany is a little bit reluctant to do that. They're insisting on a balanced budget and structural reforms from countries like France and Italy, before they'll even think about contemplating something like that. So at the moment they're at a bit of an impasse, bit of a Mexican standoff, and I think what that's made investors realise is that full-blown quantitative easing is still a very long way away.
Someone is speaking about a recession in Germany too. Do you think this is a plausible scenario?
Yes, I do. I do think it's a very plausible scenario. If you look at the most recent economic data, it's not been good. The industrial production for August was the worst figure since 2009. So is the factory orders data. Prices continue to remain under pressure. They're still fairly positive in Germany, but that's not altogether surprising, given that German unit labour costs are much lower anyway, so they don't have the same deflationary pressures that affect countries like France and Italy, whose unit labour costs are much higher. But also you've got the fact that oil prices are slipping as well. So all in all, given the fact that the Ukraine-Russia sanctions, still probably the full effects of them haven't taken place, then I think it's quite likely that we could see another recession in Germany.
Speaking about the index, the DAX, which is going really bad, today broke an important level at 8,900 and technically could have a target at 8,000. Do you think this is a pessimistic view? Do you think there could be a rebound?
I think the DAX needs to close this week back above 8,900. If it doesn't, then I think there's a very good chance that over the next few months we could fall to 8,000. I don't think that's a pessimistic view at all. If you look at where the DAX was in 2009, it was at 5,000. Since then, it's almost doubled. It hit a peak of 10,000 in the middle of the summer. It's now come down to 9,000. So even if it does drop down to 8,000, it will still be significantly above the lows that we saw in 2009. So I certainly don't think 8,000 is pessimistic in any way, shape or form. I certainly think it's very possible.
Last question on the euro-dollar. The Federal Reserve doesn't like a strong dollar. The ECB likes a weak euro. Who do you think is going to win this battle? Do you think it is possible to see the dollar rebound towards 130?
I think there's a possibility that it could well do that, but usually in a fight between central banks, it's usually the Fed that wins. I think it really depends on whether or not the ECB, the European Central Bank, is allowed to do more. I mean, there's also the fact that we've seen this week a significant outflow of funds from European equities from US hedge funds. If that continues, then absolutely I think we could see euro-dollar get quite a bit weaker, but at the moment there's a very good floor at around about 124.80. I think as long as we're above that level, then the euro is very susceptible to a rebound to around about 130. But overall, I think we're probably in a bit of a new trading range now. The Fed has already said that it is concerned about a strong dollar, and if the dollar gets too strong, then I think you could well see the Fed possibly take further action to try and weaken it.
Thank you, Mr. Hewson. Good afternoon. Until the next interview.
Thank you very much.